Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me right now is Banríon Capital Management CEO Shana Sissel. Also with me is Mark Tepper. Great to see you, Shana. Thanks very much for joining the conversation this morning.
Thank you for having me.
Because that will give us a good indicator into the consumer, right, Mark? I mean, oil prices are edging higher. That's been a major issue for inflation. So we'll see if that comes through with this quarterly number. I should point out that Senate Majority Leader Chuck Schumer is now urging the Federal Trade Commission to, quote, pump the brakes on Chevron's proposed $53 billion acquisition of Hess, saying that it would, quote, give big oil fuel to raise gasoline prices. Of course, we spoke with the chairman and CEO of Chevron, Mike Wirth, at the Milken Institute last week. Here's what he said on the deal.
This is a good deal for shareholders of both companies. It's a good deal for the industry. It's a good deal for the country of Guyana. And we're very confident that the deal will close. We're working our way through the FTC process, which we expect to be concluded by the end of this quarter, shareholder vote at the end of this month. And then we've got a contract issue with one of the other partners that will be resolved through arbitration, and that'll take a little bit longer.
Exxon is also trying to stop it because they want in on the deal for Hess and that Guyana project, Mark. But now we hear from Chuck Schumer, who's obviously doesn't want this deal to go forward.
Well, yeah, and he wants them to pump the brakes on it, the FTC to get involved to pump the brakes on it. And this is, look, gas prices when President Trump was in office, before the 2020 election, gas prices were $2.10. They're $3.62 right now, according to AAA. So, of course, the Democrats want to blame this on greedy oil companies. That's not what this is about. This is about bad energy policy coming out of this administration. And honestly, Chuck Schumer, he should be focusing on things that are driving people out of New York. And he should be trying to solve those problems to keep people living in New York. Maybe start with inflation, crime, all of those things. But, trying to blame high gas prices on greedy oil companies, the Americans are smarter than that.
Shana, how do you see all of this?
Mark, in a lot of ways, interesting fact here, whether it's oil or copper, when we start talking about commodities, there's been a noticeable shift in allocation to commodities by wealth managers globally in a way that we haven't seen before, which is also somewhat driving the prices of commodities in general. It can't be good for inflation. Let's just keep that in mind. We can have all the discussions we want about the inflation numbers being X energy, but how it affects the consumer doesn't matter, whether or not you take energy out or not. How consumer behavior is driven by commodity prices matters. And I think that that's something that we need to be concerned about.
I mean, I'm just wondering if copper is at a 2-year high because people are holding more hard assets. When you're afraid of a market that is, vulnerable to what the Fed is going to do, you want to go and hold hard assets. Gold is up, right? Other commodities are up. So is that one of the reasons that you're seeing copper at 2-year highs? Because I agree with Mark. I don't believe that this is indicative of a stronger economy right here. I think it's the opposite.
No, I completely agree with what you're saying. Gold is another perfect example. And while it's not technically a commodity, we're seeing similarly things with Bitcoin. All of these things are notable. It's a shift away from equities and fixed income that I think we should be paying attention to. It's happening for a reason. I think there is some real desire to move away from that type of exposure as people are concerned about what the Fed will do and what the economy is doing. And we've seen economic numbers be a little bit concerning as of late. And so, we got to think about what's going on with the economy, a slowing economy, a weaker consumer, not great for a recession outlook. And I think maybe that victory lap about the soft landing was a little premature.
So, Shana, one of the stocks you're looking at this week is NVIDIA. The company reports earnings next week. Obviously, this has been the face of AI and has lifted markets and many boats across the board. Do you think this rally has legs after the earnings?
I do, and anyone who knows me, and I know Mark knows me pretty well, knows that I've been an NVIDIA bull for a long time. I do think that we're still very early innings of AI. NVIDIA is obviously the biggest player in that space. And as NVIDIA goes, as does tech in a lot of ways, as does the semis in a lot of ways, and as does the market in a lot of ways, if you think about it. There's no reason to not expect that NVIDIA earnings will continue to be great. I think my biggest concern with NVIDIA right now is that they beat earnings, but not to the same extent that they have been. So the momentum of their earnings beats starts to slow down, which, if you're a long-term bull for NVIDIA, could provide you with a very interesting entry point into the stock. It's gone up so much in the last year or two. So, just things to keep in mind. I think long-term, the tailwind remains, but if there's any weakness on this earnings report, I would be a buyer.
All right, so they report on the 22nd. We'll be all over that one. Shana, good to see you. Thanks very much. Shana Sissel joining us. Mark, you're with us all morning, and we're so happy about that.